Greetings, Inderes TV viewers and listeners. Nordea published its fourth quarter results today. I'm interviewing Group CFO Ian Smith here at Nordea headquarters at Vallila Financial District. Ian, congratulations for another nice quarter. What were the main drivers behind the results?
Thanks, Veneri. Yes, it was a really solid fourth quarter to end a record year for Nordea. You know, in 2023 we had record profits, record dividends. So, I think all very good for our shareholders. And for the fourth quarter, I guess the highlights were, first of all, strong net interest income, solid fee income levels. We saw some friction from interest rate volatility that took down our net fair value, but that's a temporary outcome. And then we started to see the first loan losses for some time, and that's really what as we've been expecting for some time to see the impact of the changed macro environment, higher interest rates, those things. So we saw in a couple of situations in certain industries the need to take some provisions, but all at manageable and consistent levels. And then we saw good capital generation, strong liquidity, so really good shape on the balance sheet.
We could continue from the loan losses. I think it was few quarters back in an interview I joked that one needs a magnifier to check your loan losses because they were almost invisible. But now they were clearly visible even though they were small. Yeah. But in any case, how do you see the trend going forward? And can you elaborate more on what areas there were more loan losses?
Yeah, so I think we've all expected to see us come back to a more normal level from what has been over 21 through 23 extremely low levels. The average of 3 basis points in 2022 and 2023, and we would expect to see 10 basis points as a normal level. In terms of where those are occurring, it's in our corporate business in a number of limited situations, and they're in the areas of industry that are probably suffering the most at the moment, and that's construction and certain parts of the retail business. So, those are the ones that I think are suffering most from lower activity levels, lower consumer demand.
How would you describe the economic environment from Nordea's perspective in the Nordics in general?
So I think, as I said in my presentation today, we're in some very strong economies. We've seen low growth and in some countries negative quarters over the last year or so. But I think the prospects are good for recovery. I think 2024 will be more muted than we've seen over the last few years, but I think things look good for recovery in 2025. But we said all along it needs stability, it needs confidence, and all of those things have been in short supply over the last year or so. So I think we're optimistic that after probably a reasonably flat 24, that we'll see a return to some growth in 2025.
How do you see your net interest income development this year? I think we are seeing the peak, at least when I look at the Euribor interest rates and so on. At the same time, your expenses continues to grow, but at a slower pace. So how do you see this dynamic?
Yeah. So, I think many people think we're at the high point of interest rates, and our net interest income has been exceptionally strong in 2023. We grew 19% in Q4. And I think that as interest rates start to come down, we'll see some a sense of relief, I think, with our customers, because it does make life a little bit tougher for them at those higher rates. And that should be encouraging for confidence and for, particularly with companies starting to think again about investment and other things that will drive GDP growth. So yes, I think we will start to see as rates come down, we'll see some impact on net interest income. It should be, I think, relatively resilient, certainly for the first set of rate cuts. But then I'm hopeful that we'll see that lower rate environment stimulate activity elsewhere in the economy. And that's going to be good for customers who buy savings products and also for customers that want to be active and grow their businesses.
Exactly. Then I think the biggest news were the new financial targets you published also today, return on equity over 15%. So could you go through the new targets and what are the basic assumptions behind those targets?
Yes, so we upgraded our 2025 financial target from a return on equity above 13% to a return on equity above 15%. And that reflects, first of all, the strengthening of our business generally, but also a recognition that we see higher income in an environment where positive interest rates are here to stay. So while we expect interest rates to come down from where they are today, our broad expectation is that they'll settle at around 2% on average positive. And that gives a bit of stability, but also gives us an opportunity to have positive net interest margins. So, I think we'll see continued strong income. And costs have been, an area where because of our investments and because of strong inflation, we saw them step up. Net our costs were up 5% in 2023. Excluding intangible asset write-offs. And so, that I guess that cost pressure continues and it's our job to manage that. If we see the income environment taking a turn for the worst, you can expect continued strong cost control from us.
This is a bit simplistic question because it's inherently almost impossible to forecast inflation and interest rates. But should we think that if the interest rate level stays way above 2% or it crashes back to 0%, then either you will easily reach your target of above 15% of return on equity, or then you will go lower than the target is?
Yeah, so I think maybe we should look at the scenario where we see interest rates going a little bit lower than 2%. Of course, there are lots of different factors that come into play there. When we were in a lower rate environment, we saw strong growth, for example, in assets under management, which helps with our fee income. So I think Nordea has a number of strengths in its business that help to compensate for different macroeconomic environments. So we remain confident in our target of above 15% ROE in 2025.
We touched this topic in the last interview as well, but and I think I asked, it was around this question that is this the peak Nordea results where it's very hard to improve results anymore? So when you're stating this target of ROE about 15%, and now you have already achieved that in the last 12 months, so is this the peak Nordea results?
So I don't think we should ever call a peak, but certainly, given the very strong ROE performance, almost 17% in 2023, and that's without loan losses and in a higher interest rate environment. And I think that the market expects the ROE to come down a little because as loan losses normalize, particularly. So I think that people expect us to settle perhaps at lower levels than we saw in 2023. But let's see. We continue to strive to improve every day in Nordea, and we'll try and deal with everything that the world throws at us.
Then, lastly, about your how you reward your shareholders. You announced a dividend of 92 cents per share, and how would you comment your dividend policy going forward and the buybacks as well?
Yeah, so 92 cents is a 15% increase on the dividend in 2022. I hope shareholders will welcome that. And it was firmly in line with our policy of paying out 60 to 70%. We also continued with buybacks. And going forward, we would expect to continue that mix of strong dividends and buybacks where we have excess capital. And I think we make a careful decision about the balance between those because we recognize that, for example, our more than 500,000 retail shareholders probably value dividends more than buybacks. Institutional shareholders may have different preferences. So we always seek to balance those. I think the important message is that Nordea will continue to return high levels of capital to shareholders as we earn.
What are the levels in absolute terms? I think you had in your presentation, you had a slide that you had paid in the last 2 years 6 billion euros of dividends and maybe 4 billion euros of buybacks. I think you remember better, but what are the levels going forward?
So we've not specified the mix going forward, but obviously where we've committed to 17 to 18 billion of return over the next by 2025, with 9.6 billion so far. It's pretty clear that there are strong returns still to come, but we haven't specified the mix.
Thanks, Ian, for the nice interview. I'm looking forward to the next one.
Pleasure, Verneri. Very good to see you again.